Platinum has had an extraordinary run over the last 2 months. Trevor Raymond, Director of Research at the World Platinum Investment Council, is back to give us his take on why the price has run up and where the price is headed from here. Trevor, welcome back.
Hi, David. Thank you. Great to be back.
It's been 2 months since we spoke. You were last on in early December. December 4th was the last air date we had with you. And the price of platinum has risen from around $1,000 to a max of $1,300, and now today it's sitting around $1,230. So it's had a substantial run, 20 to 30% over the last 2 months, which is a lot for any metal, particularly base/precious metal, however you like to categorize it. Can you explain the fundamentals behind this bull run?
Sure, David. I think what we've seen over this period is just more visibility for platinum. And I think what underpins what's going on is really all about demand growth, constrained supply, and visibility. So let me unpack that a little. I think visibility, what has happened during COVID is that the world has become more aware that the hydrogen economy is probably a certainty. And we can explore some of the reasons why that hydrogen economy is most likely to happen. Platinum is very involved in both the production of green hydrogen as well as use in fuel cell vehicles. And then what you've got on supply is being constrained due to low prices over a decade, underinvestment in the main mining region of South Africa. And then demand growth, you've got some significant demand growth out 10 years, which normally doesn't get investors too excited, but you've got substantial demand growth in the next few years from substitution by platinum for palladium. So I think this combination of demand growth and constrained supply, together with the price moving, is why we're seeing such significant interest and that price trajectory.
Yeah. I have to draw parallels to other metals, in particular like silver, for example, which is also a key component in the electrification of our economy. Yet that metal has not risen 30% since December. And where can the parallels be drawn, and where does the parallel end for you, Trevor?
So I think there's a good parallel that they both have precious metal aspects as well as industrial metal aspects. But I think the difference is that the platinum has been particularly undervalued for the last 6 years. So since we last spoke, even early last year, the undervaluation compared to gold and compared to palladium was quite material. And what you're seeing now is that the recognition that platinum is used in the growth and production of green hydrogen, and silver is used in certainly the renewable power to produce renewable electricity from solar panels, is that silver's been used in that use quite a lot. With platinum, the amount of demand growth from producing green hydrogen isn't really material. The demand growth, however, from using fuel cell vehicles is really material. You had figures quoted of between 3 and 6 million ounces of additional demand for platinum in 10 to 15 years' time. And that's a significant demand growth. I don't think silver can expect anything like that in terms of its role. So I think platinum's got a particularly important strategic role. And then platinum's been so undervalued compared to gold. There's been a huge demand for precious metals, people wanting to own gold as a diversifier. Certainly many are owning platinum for the same reasons. And then the undervaluation compared to palladium, and platinum's still $1,000 an ounce below palladium, and they can be substituted on a one-to-one basis in vehicle auto catalysts. Mm-hmm. So I think those kind of recognitions that are coming through now, the parallel is just kind of interesting. But in terms of platinum, I think value is being recognized currently.
But just from a short-term, more trading perspective now, Trevor, platinum's relationship to gold, for example, can you characterize this relationship? Is there a relationship? What do traders need to be aware of?
So yes, David, I think anybody owning platinum needs to know that platinum and the price of platinum, the price of gold are strongly correlated. And in a sense, I didn't mention is that we saw gold rush when global risk was up. When we had announcements of the vaccination, we saw the gold price weaken and platinum strengthen. But what you do get is, from a short-term perspective, traders that trade gold know that if gold goes up $40, platinum will go up $60. So there's a lot of short-term trading going on. But if you go back and look at the past 40, 45 years, over 80% of that time, you'll see that platinum traded at a premium to gold.
Hmm.
More recently, it's been at a significant discount to gold. So part of this run-up in price is that discount to gold has narrowed. And as I said, there's no reason why it shouldn't continue to move towards gold. But for most of the time, and it kind of makes sense because platinum's just as precious as gold. It just hasn't been around for as long. And yet you've got this massive disconnect. So very relevant. But certainly the volatility of gold will play out into the volatility of platinum.
And real quick, is that part of your analysis when you say that platinum is undervalued? You're referring to the historical premium to gold and why it's not trading at a premium to gold right now?
Absolutely, at a discount to gold, which is really unusual, and then at a discount to platinum itself in terms of absolute price level, and a big discount to palladium. I mean, that's just really much harder to explain why a one-to-one substitute sits at $1,000 cheaper.
So Trevor, let's talk about the hydrogen economy now. You mentioned earlier that during COVID, people realized that hydrogen is the path forward. Can you explain why people have come to this realization during the pandemic?
Yeah, David, I think there's two reasons. I think firstly, we saw during the first lockdown significantly reduced economic activity in the world, and we saw clean air. So that was the sort of first penny that dropped. And then secondly, I think countries around the world realized that the cost of the pandemic was enormous and that money to continue to address climate change in the way that they'd been addressing it was perhaps tight. So what they've done is they've changed policy and they've focused on sustainability. And that's been a breakthrough. So what countries are saying is that they've made hydrogen a mainstream fuel. And then suddenly we saw during COVID, Europe publish its hydrogen strategy. They're going to produce 40 gigawatts of green hydrogen by 2030. We saw the US on the first day of the Biden administration re-entering the Paris Climate Agreement, and that undertakes to decarbonize by 2050. And then China as well announced that they would decarbonize by 2060. So the amount of money, I think the $2 trillion budget from the Biden administration says what people want to do is to use hydrogen as an alternative to fossil fuel, not only to decarbonize transport, but to decarbonize heavy industry as well. And I think the groundswell of information flow around that has led people to believe that certainly the hydrogen economy is on, green hydrogen is important, and hence platinum's role in that.
Are you seeing this transition taking place now, Trevor? Or is this just sort of a plan for the future? Are we seeing platinum being utilized for the creation and construction of fuel cells right now?
So yes, as I said, when investors look at platinum, the amount of platinum going into producing green hydrogen is quite small. So there's an electrolyzer called a PEM electrolyzer that uses platinum. It's high efficiency and preferred over the other technologies. And you might have anything between 200 and 600,000 ounces of platinum used in 10 years. So that's not really that exciting. But the key is that there's a big focus and huge amounts of money going into reducing the cost of hydrogen. So getting hydrogen down from over $4 per kilogram down to $2 per kilogram suddenly makes hydrogen a more attractive fuel than fossil fuels in heavy industry as well. So suddenly you've got this attraction and the pull from the hydrogen fuel. So although we're seeing some ounces of platinum used to produce green hydrogen, it's small. The fuel cell electric vehicle in 10 years' time is a huge platinum demand, 1 million to 3 million ounces. But the real issue is that in between those two, you've got significant heavy-duty trucks using fuel cells. So you've got trucks, buses, trains. So there'll be a few 100,000 ounces of platinum demand on the heavy-duty side of the fuel cell, and that's now more interesting. So those are the two sort of attractions to do with the hydrogen economy, but then we'll come back to the other demand growth for platinum that's really much shorter term and much more exciting.
Okay, let's talk about more of the near term now, the platinum price run that we've seen. Do you have any idea as to whether or not this price run has been driven primarily by retail investors or institutions?
So I think so when we spoke last, we mentioned that there'd been a blowout on the NYMEX futures exchange. And why that's relevant is that if you look at the short-term movements in the platinum price, they're very strongly correlated to futures positioning. So we had investors that were reluctant to use that futures market between about June and October. Fortunately, there's now over 500,000 ounces of 50-ounce bars sitting in NYMEX vaults, liquidity has returned, and the bullion banks that make the market in the futures are quite comfortably doing that again. And what we saw from sort of late November, December, is we saw the long position in futures increasing. And I think that's what's driven the price up. So as that long position continues to increase, we've had the price strength. And that's on the back of 1 million ounces of platinum investment demand that went into ETFs in 2019, and then another 500,000 ounces that went into in 2020, backed by this 500,000 ounces of bars that was sort of put into NYMEX vaults, and then very strong import demand from China. So you've had nearly 2.5 million ounces of platinum that has been taken off the market without much fanfare, without much recognition. So you've had quite a tight market situation. And then suddenly you lay onto that an increasing futures position and you get a price move. And it's a bit circular. When the price moves, investors say, why is it going up? They come in and have a look and they say, wow, we didn't know platinum was used in the hydrogen economy, and we didn't know that substitution was as chunky as it is. And that seems to have been what's driven the interest. And then you've had inflows into ETFs, a lot of bar and coin buying associated with the gold, precious metal bar and coin buying. So it's been really a combination of factors, but certainly that's played out in the price. And interestingly, there doesn't seem to be any reason why platinum shouldn't continue to move towards the price of gold and the price of palladium. There's no real notch here, other than, as you said at the beginning, gee, people see a price of $300 on $1,000, and that's unusual. But it actually could move another 300, and it would be not just as unusual.
Right. Trevor, you saw what happened with silver a few weeks back with the squeeze. A bunch of retail investors rushed in to try to get the price up. They used various instruments to do that, and we saw premiums for physical silver rise as a result. They've normalized somewhat, but you saw what happened. Can the same thing happen with the platinum market?
So I think the Reddit GameStop issue is that if you get a lot of people acting in the same direction, you get a price response. And I think the silver market was a little bit different to the equity market, where certainly it played out with the equities. So I think that is what it is. There's been a lot of news flow on that. I think that the interesting thing is that the premium on platinum coins, for example, last March and April were huge, because what happened is that as COVID stopped flights, there was pretty much no stock of platinum bars and coins in the US. Mm-hmm. So people had bought up everything, and that stock took quite a while to come back. It was probably only October or November when platinum bars and coins were again available in the US. Yeah. So I think the realization that even in silver you could get some price moves, again, people that looked at silver and thought about it and now look at platinum say, hey, what's interesting here? And certainly you've got this demand growth and the substitution for palladium. That seems to be the most material short term. So yes, I think silver did platinum a favor. If anything, it got more investors to have a look at platinum.
That was my next question, Trevor, is how much impact the silver squeeze has had on the platinum market. I'm looking at the platinum chart again, and I noticed that most of the run up that we've seen over the last 2 months happened in February, and so that coincides with the same time as the silver squeeze happening. So do you see retail investors rushing into silver, also rushing into platinum at the same time?
I think just there's some retail investors that hadn't thought about silver and then did, and those that had some exposure to silver looked at platinum, certainly. I think the retail run-up was not that material in terms of the platinum price move. If you look at the NYMEX futures positioning, it was a lot bigger. So I think there were more institutional investors, and in fairness, I think the whole Reddit GameStop, a lot of institutional investors sat up and looked at what was going on, and then certainly looked at the platinum markets. I think silver, did platinum a big favor. And I think that the short-term demand growth that everybody's seeing is that if you look at what's happened in precious metals, you've had rhodium that has moved over $20,000 an ounce. You've had palladium that went from $350 to $750 to $2,350. So you've still got palladium really way above platinum. And a lot of investors looked around and said, well, why is the lag? And there really isn't much logic. So you've now had Sibanye-Stillwater, who's worked very closely with BASF. They published their research last year to say that platinum can substitute palladium in gasoline catalysts. Sure. And they're now talking of, upwards of 1.5 million ounces per annum of substitution. Now that's necessary because the palladium market is going into another, I think it's the 9th consecutive deficit. The rhodium market is incredibly tight. So certainly that 1.5 million ounces of demand growth in 3 years is very material for platinum. So I think all the institutional investors that are looking at it because of silver are suddenly seeing some really chunky short-term demand growth, and that's what's behind that futures positioning getting longer.
But suppose, just hypothetically, suppose the world were to orchestrate a squeeze on platinum and corner this platinum market. This is a fundamental exercise. Could they do it? Is a platinum large enough to sustain this kind of shock?
That's an interesting question. I mean, the platinum market is really tiny compared to both gold and silver.
Yes.
There's close on $4 billion in the platinum ETF, so $4 billion isn't a lot. If you were to get a retail wave of people that wanted to put a few $1 billion into platinum, most certainly it would have an impact. But I think it doesn't need that. I think the institutional investors that recognize that it's undervalued, that look at the demand growth, and look at the tightened market, I think that that positioning, the long positioning, is likely to continue to grow and take price with it. Whether retail investors get along for the ride, I suppose that's conjecture, David.
Absolutely. Well, that was a very interesting update. Platinum has had a tremendous run. I hope to get more updates from you as we get more price action down the line. Thank you very much, Trevor, for coming on the show today.
Only a pleasure. Thank you, David.
And thank you for watching Kitco News. I'm David Lin.